How's it going, everyone? It's Sam. We are looking at Nordic American Tankers, or NAT stock, and this is a stock that I used to cover a lot, but after I sold it, I didn't cover it as much. So, just looking at the stock here, it was up to about $9 or $10 at one point this year, and then has slowly dropped off over time, and now it's saying about $3.30. So, I want to talk whether it is a good dividend paying stock that you should invest in that has significant upside, or whether I think it is a value trap or a dividend trap. So if you guys like this, please leave a thumbs up. It means a lot. And two, if you want some free stocks through WeBull, they're running this just until the end of the month. So just a few more days where if you deposit $100, you can get 3 free stocks worth up to $1,600 for 2 of them. And then the other one is worth up to $250. So it's definitely worth checking out, if nothing else, just because it's a great value right now. So Nordic American Tanker has been down pretty significantly over the year. We can see here that it was up to about $9 or so, but on the year it was significantly down, even from where it is now, back in March. So before the craziness of the pandemic and before all this news about oil tankers and the super cycle that was going to happen and the contango situation where these companies and these oil tankers were storing so much oil because the cost of oil was so cheap that they were just shooting up in price. They were able to charge 3 to 5 times their normal rates for companies to store oil with them. But since then, it's slowly gone down. So I ended up investing a decent amount in NAT, but I slowly sold it off because of the fact that earnings were coming up. People were selling before the earnings, and even with the earnings, people were still selling afterwards. So I thought that, we had seen some down weeks and some down months in what they were able to earn. But I thought that with the coming winter, which usually is a really good time for these tankers, that we would start to see the price slowly start to go up. And if we look here, we've had some good earnings, right? So their net income was about 40 million, then 50 million over the last 2 quarters, which has a earnings per share of about 27 cents and 33 cents. And when you consider this, about 30 cents per share per quarter, that is really good. That's a really good earnings, right? That puts them at a PE ratio, if they're able to consistently earn this, of about 3. I mean, you don't see companies in the stock market that are making money at a PE ratio of 3. That is an insane number. And the thing that we have to keep in mind is a couple things. First of all, the next earnings date is coming up here. So it is in about a month, and they are set to release their third quarter earnings. So this is what is making me a little bit cautious. So the stock price keeps falling. It's fallen over the last month, and it's fallen since even before then. So with their earnings coming up, I wanted to take a look at what kind of earnings they might be looking at. And while I haven't been keeping up on the stock as much as I used to, I still know you can go down to the tanker market report, and this is not just for NAT, this is a general tanker market report. And you can see here the tanker market index, so the index of all the different tankers, is down significantly. You can see here that 2020 has been a horrible year so far in October and September compared to the last 2 years. If we scroll down here, we can see the Suez Max is around $2,000 to $3,000 to $4,000 a day. Now, if you remember from before, that is a very low amount because it costs about $8,000 a day to run these things. So they are losing significant money whenever they have business. So that is not a good sign. Now, I will say they have had some good dividends. So you can see here 20 cents a share, 14 cents a share. NAT does do a good job of trying to pay out the shareholders by giving them dividends. So over a 1-year basis, if you average this out, that would be 68 cents a share if this was to progress forward, which is a very significant dividend yield, over 20%. Now, that is all well and good, but if they don't have the earnings to support that, if they're having to take out debt, if they are trying to support this artificially, that's not going to be good for the company long term and will continue to push the stock price down. We can see that there has been some news recently. First of all, these shareholders, usually the CEO and the CEO's son, they've been buying up shares. So they've been buying 50,000 shares at each of these times. So at first, this was something that they were doing that I personally got a good feeling about at first, because usually that's really good when the CEO or the board members are buying up shares. However, they continued to do this, and while it might seem like it's a positive reinforcement or a positive thing that they are doing, it just is coming at weird times, and they're buying up the exact same amount of shares, and the stock continues to drop. It was almost like they're trying to do it to give some kind of good news, and the stock continues to drop lower every time that they buy some shares. So they could definitely be thinking there's a lot of value here, but with their terrible earnings recently, and with it being up significantly from where it was a year and a few months ago, that doesn't really give me the feeling that I would like to have investing in this company. So I feel like there are better times to buy. I mean, of course, they could think that it's going to go back up with maybe a super cycle. So what a super cycle is there are decreasing numbers of tankers. Not a lot of companies are buying tankers. So this will naturally push the cost of renting out one of these tankers up, causing them to have better earnings and causing them to be able to give more to shareholders. However, they're also going to have less tankers to earn this money. And I think that this is a longer term outlook. This is years down the line. So there's that to think about. Now, they say here that they are financing 2 different new tankers. So that is something to keep in mind, that they are trying to expand their fleet. Their fleet is very old. So that is something else to be concerned about, that this is one of the oldest fleets out there. Now, some other companies possibly have some better earnings. I feel like it is a bit of a dividend trap, a little bit of a value trap, where you could think about investing in it, but it just continuously goes down. They don't have good earnings. They still are up significantly over the last year, year and a half. So I don't feel like they are necessarily at a really good value. It's not like they're at, 2 or 3 year lows. They are still up significantly from where they were just a little while ago. So I personally am not investing, but I did want to cover it because it had been a very long time since I've talked about the stock. I would be curious in knowing what you think about this, whether you were invested in NAT or whether you've thought about it or whether you were invested. I do like to cover these stocks. It's a little bit nostalgic because I did think about this stock a lot and I did talk about it a lot and I did own it. So I do like to check up on these every so often just to see how they're doing. So thank you guys so much. Thank you for hitting the like button. Thank you for checking out WeBull down in the description. Thank you for commenting, and I will see you in the next video. Bye.